Hey everyone, how's it going? Today, let's analyze the chart from scratch. I got so many questions about asking how to actually identify price action from a completely scratch kind of chart, no prior drawing, no prior analysis. What do I do from a completely blank chart? Now, you might have seen me done many drawings, many chart, many analysis that's already pre-drawn in, and you're wondering how to do that from a completely blank point of view. So let's get started. I'm going to go over how I utilize price action, multi-time frame analysis in my advantage to identify price, to identify possible entries. Now, we're going to start from the higher time frame, right? So make sure you have two layouts at least. This is what I usually do is I'll have a higher time frame layout and I'll have a lower time frame layout. I'll explain why this makes sense. You're always going to start from your higher time frame bias, which means you're going to start from analyzing the chart from higher time frame. And usually it can be from daily, weekly, or monthly. Generally, I just stick to daily because they are the most used time frame. And to be honest, when you go on to the monthly, there's less candle development. There's less kind of uh, information here for us to process to or to analyze. Whereas daily, there is enough kind of a development here, which makes sense. Now, identifying the impulse phase of the market. This is the important part where about price action is that you might have seen me talk about impulses phase, correction phase. Well, impulse phase is really just a period of fast momentum, right? A period of fast momentum on any different time frame that is fast in the making. There is not too much consolidation. There is not too much stalling or sideways kind of movement. It is just a straight up aggressive move, whether to the upside or whether to the downside, depending on what you're looking at. And this is a clear impulsive phase here on corn. So on the higher time frame, we can clearly see that that is an impulsive phase. That's the first thing you need to identify on the market. Now, second thing is identifying the period of consolidation. Now that you identify the impulsive phase, what follows it is always going to be a consolidation. Okay, so understand that after the impulsive phase of the market, there is going to be consolidation. So using trend lines, you're trying to connect the swing highs and low of the price. You're basically connecting the swing high and low. So trying to be a little bit more careful when you're connecting the highs. You want to make sure that they are just touching all the swing highs and lows. So in this case, the top trend line, and then in this case, the bottom trend line, as you can see here. So I'm identifying the swing highs and lows of the price, and you're trying to point out or pinpoint a possible price action structures and pattern. Again, there are many price action structures and pattern, which I will put educational video below in this video that you can learn about. But generally, you're going to identify whether or not this is going to be a bullish continuation or some sort of bearish reversal. So in this case, corn, after the impulsive phase, we identify the structure here. This is likely to be a bullish continuation price action by the way of how it forms. It's a consolidation. It's moving down slowly down, but it's moving sideways. So we know that it is a consolidation. This is the most important part is identifying the correction, identifying what type of price action the price is making because you can then utilize that to your advantage. Now, once you identify the higher time frame phase of the market, which is this consolidation phase, you're going to go down to your lower time frame. This is why we have two time frame here. Is that one for the higher time frame and one for the lower time frame? You're gonna go to the lower time frame and you're basically going to do the same thing, but utilizing the higher time frame drawing already, which is what I do here. I select the trend lines here. I'll go sync in the chart so it will appear on the lower time frame. So now we can see that here on the lower time frame. Lower time frame can be anything under 2 hour, 1 hour, 30 minutes, 15 minutes, etc. It doesn't have to be a specific time frame, but rather a lower time frame that is can tell you a little bit more story when you look inside the correction or when you look a little bit closer into the development of the price. Now, um, using multi-time frame analysis, now you're going to identify the same thing now, right? So we see the high time frame bias here, we see the high time frame price action. Now we're going to go to the lower time frame here on 1 hour as example. We're going to identify the same impulsive phase in the market. So we can see that after this double bottom here of the price had this impulse break, right? Impulse break to the upside, which is good because you want to see that the lower time frame is also giving you a bias towards the upside, right? So you can see that after price breaking out here, there is a clear, smaller correction here in the market, right? So if we zoom in here to the lower time frame, you can identify this is an impulsive move, and this is the correctional structure that price is making, and this is a valid setup here to look for a potential buy, knowing that the higher time frame bias here is looking for upside. And on the lower time frame, you can clearly see that lower time frame also give you that bullish bias, bullish kind of correction, and this is likely to be a continuation correction for the upside. And this is generally where you can place an entry order looking for a up move from the price. And this is exactly where I entered this position here, basically setting the entry order here, setting the stop loss below the correction. You're looking for the next swing high as a potential target, and perhaps looking for a further upside mid to long term approach, whether or not the higher time frame outlook can the price eventually reach the potential high. Okay, so we're going to do a bunch of analysis, bunch of different examples starting from scratch so you can get a very good point of how I'm going to, again, analyze anything from the scratch and identifying price action on higher time frame and lower time frame so that it gives you confluence, it gives you a better probability of entering these positions because they likely to work out when you have the higher time frame and the lower time frame in your favor. Now, let's take a look at a few examples, right? So let's starting with Dow Jones here, which is US World 30. So again, identifying the impulsive phase. This is clearly an impulsive phase moving upside, right? This is clearly a up move after the coronavirus crash. And you can slowly see that there is a few correction here in the middle, which again leads into a continuation price action. Now we're looking at the latest price action developing here is that after this bullish push up to the price, you can see there is some sort of consolidation now, right? And this is where we're going to, again, using the trend line, pinpoint the swing highs and lows of the price. Now you're slowly to see that there is some sort of correctional structure here. This is generally going to be an ascending structure, and ascending structure are usually going to be a reversal type of price action. So now that we identify what's going on the higher time frame, again, we're going to go down to the lower time frame now. So I'm going to sync these two trend lines here, and I'm going to go to the lower time frame. So the point of going to the lower time frame once again is that to identify, is there more lower time frame confluence? Is there more confirmation that we can utilize? Again, right away I identify, well, I see a double top here, right? Double top here is a bearish reversal. And I look closely here, there's also a smaller ascending channel here, just kind of hitting the double top here, and price is pushing down now. This is generally a good sign that the higher time frame is already showing you a possible bearish reversal just by looking at what the price has previous done many times here. You can see every time when price forms these ascending structure, ascending channel, they usually do play out and reverse down to the price. So already on the higher time frame, we have that bias, and now that we're on the lower time frame, you can see that lower time frame is also giving you that bias, and it comes down to possibly looking for an entry and possibly looking for an entry to sell down to the previous low. Now you're gonna do this for pretty much any time frame, any market, because you're gonna start doing this on scratch on different market. Now we're going into commodities now. So silver here, same idea. Identify the impulsive phase. This is an impulsive phase on the higher time frame. Now identify the correction phase. Well, let's connect the swing highs and lows of the correction. So right away you can see that there is a larger kind of a structure, a parallel triangle kind of structure that's in the making, and we can go down to the lower time frame once again to look for confluence. So we go down to the lower time frame. You can see that lower time frame here has a double bottom here. Price is basically hitting to the double bottom here, and it's not breaking lower. Instead, what do we else we have here? Well, let's identify more price action here. We see that there is a descending channel here, basically pushing the price down. So descending channel, what do we know of that? It is a bullish reversal in the making. So you can see, once you get comfortable at identifying price action like this, you can clearly point out what the possible direction of the price. While the price is in the middle here, I pretty much forecast the possibility of the price moving down to the low here before the big reversal, and pretty much price is playing out exactly as what I predicted here, making the low to the low here, and we're pushing up here slowly, potentially moving up to the top here. Now let's look at a few more different examples. Now we're in the forex market. Now again, start from the higher time frame, right? You can see that from the higher time frame here, we can identify what the impulses face. Well, this is the impulsive phase clearly. We can identify the correction. This is the correctional structure. And what happens after? We have another impulsive move. Then what happens now after? Well, we have another correctional structure. So again, more of you do this, the more you're going to easily identify that impulse down, correction, impulse down, correction, and what's likely to happen? Another impulse down. So again, looking at the lower time frame for possible confirmation. So when we go down to lower time frame, what do we see from this price here? Well, you can see clearly that there is a head and shoulder pattern in the making. If we look to the left here, what do we have here? Well, we also have a previous swing high that the price is rejecting. So double top here, kind of a ascending channel, head and shoulder pattern at the top. And what do we look for? Well, we're going to look for sell now, because that is going to be a bearish kind of price action in the making. And when the right shoulder completes, we did see the impulse and move to the downside. So again, starting from the higher time frame, remember, this is why we start all of our analysis on the higher time frame, because multi-time frame analysis works out for you and gives you a better probability of success, because a top-down approach, the price is likely to follow the higher time frame bias and the higher time frame view. And again, for us to be more consistent, for us to have a better probability of success, is to combine the higher time frame and combining the lower time frame as well, so that you align up the higher time frame and lower time frame to give you a better opportunity. It gives you a better probability of hitting a potential winning trades and a good risk reward trade as well. So here on Euro Kiwi, we can see that again, higher time frame, this is the impulse. We identified the correction already. And now we're going to go down to the lower time frame here. Once we go down to the lower time frame, what do we identify? Well, we have that impulsive move down, we have the correctional structure, and we're pushing down again. And what do we have here? Well, it's a little bit more ascending like structure, but it is a continuation correction. So impulse down, correction, and we're pretty much pushing down again. So for those of you who follow me, we've been talking about the sell here ever since when it started forming into this consolidation, and this is why it's playing out to the downside. Now we're going to look at a few more examples, such as Aussie Kiwi here. Aussie Kiwi, again, starting from the higher time frame, what do we have here? Well, this is more into a corrective price action now, right? This is not an impulsive move like something like this. This is more of a corrective price action that we can see on the higher time frame. So again, higher time frame bias at the time was looking like we might have a bullish reversal. So going down to the lower time frame, what do we have? Well, we have that same descending channel pushing down, and then basically we're looking for a possible bullish reversal, combining all the bullish factor that we see, and price does indeed push up to that previous high here as that first potential target. We're going to look at different market now. Let's look at Cardano here. Cardano is a cryptocurrency. As you can see, price again identifying the impulsive phase, right? We have an impulse up, we have a correctional structure, we have another impulse up, but instead of continuation to go higher, this is a reversal, right? This is a reversal impulse pushing down. But what happened after the impulse? We fall into another correctional structure. So again, understanding that after the impulse, correction likely to form, and after the correction form, the impulse is likely to happen exactly in this case. Bearish push down from the price, we identify the price action on the lower time frame, and we basically look for a completion of this bearish correction on the lower time frame. Price push up, followed by a lower time frame continuation correction, and this is how the price is able to push higher. Exactly kind of what we talk about is aligning up the lower time frame, aligning up with the higher time frame, and you can be able to capture moves like these in the market. Going to Nasdaq here, zooming out here on the higher time frame, we have these higher time frame move up, higher time frame correction, higher time frame move up, higher time frame correction. We move up once again. But in reality, if you look at it, this is more of a sideways consolidation. So again, using the trend line to connect the swing highs and low. Now you can see that there is a more clear ascending channel structure in the making. So we're gonna sync that to the lower time frame, and now that we go to the lower time frame, what other confluence can we find here? Once again, we're gonna identify higher time frame lower time frame double top. Price is heading to the double top now, and it's stalling here. Now we're going to look for or forecast the possibility of an entry, right? So what we really want to see here is either going to be consolidation here a little bit more, and then push down followed by correction, and then eventually push down lower, or we're going to push down here and form a little bit of correction, potential a head and shoulder pattern. So it's important to forecast these while we have the higher time frame bias looking bearish. On the lower time frame, price hasn't developed into the right entry yet. So we're going to forecast the possibility of a price that is likely to develop in this situation, in this current price action. Whether or not the price does develop into that, that's not something we can control. But what we can control is our entry, our setups, our management, and more. You can see the previous move I forecast pushing down to the previous low just as expected. We didn't break out and continue, and we make another move back up. But all that's showing us is that we're just right back up at the double top here, and we're still going to look for a possible sell if the market gives us that opportunity. Now again, going to different market, now we're going to Tesla now. So Tesla, what happens here? Well, we have a large impulse up, we follow by a continuation correction. We have another impulse up, and we have another continuation correction. So already, impulse phase, correction phase, impulse phase, correction phase, impulsive phase. And what's likely to happen? Correction phase, and then looking for the upside again. So looking at this on the lower time frame, you'll see that I pinpoint this one out around in the month of June, if I recall. After the price has made all these impulse and move to the upside, what happens? Consolidation, right? So we pinpoint the structure here. We know that this is likely to be a kind of a triangle structure, and because we just impulse out from the bottom, we know that it's likelihood of continuation. And all that left is identifying a potential setup that you can potentially enter. And here on Tesla here, after this triangle structure, price does indeed push up, form a little bit of correction here, and then pushing out above the all-time high. Nike here, same idea, same example here when we identify here on the higher time frame. So after coronavirus push down, what happens? Impulsive move to the upside. What happens after the impulsive move? Identifying the correction here. What happens after correction? Impulsive move. After the impulsive move, what happens? Correctional period, and you're going to identify the impulsive move over and over again. Now that you identify the correction phase on the market, you're always going to go down to the lower time frame, right? You're always going down to the lower time frame. You're basically looking for possible entries. And here on the lower time frame, you can see that after price breaking all-time high here, price form a little bit of consolidation. This is exactly kind of what I pinpoint here once again, is once we break the all-time high and then we form bullish continuation, that is always going to be your next buy setups that you can take because it, again, align with the higher time frame bias. All right, so to recap everything, let's take a look. To recap everything that we talked about today, we're going to start from the higher time frame first, right? This is always going to be the higher time frame bias is always going to weigh heavier, and it's always going to give you a better bias point of view. So starting from the higher time frame, what do? We identify the impulse phase first, right? So again, impulsive phase is a period of fast momentum, really fast market. There's not too much consolidation, right? It's just really sharp move to the upside. There's likely to be just a little bit of consolidation, but these are just bullish continuation price action that the price is currently in, and it basically continue to push up. So once you identify the higher time frame impulsive phase, you're going to identify the higher time frame correction phase. So again, using the trend line, connecting the swing highs and low, you're identifying that there is consolidation here. So once you identify the consolidation, copy the trend lines over to the lower time frame so they show up on the lower time frame, right? So remember, higher time frame is used to for you to identify the possible direction and the possible bias in your point of view of the market. Now that you're on the lower time frame, what do you do? Well, lower time frame is for confirmation and entry, right? So when you're on the lower time frame, you're looking at the price here. You have the same higher time frame correction that you identify on the higher time frame chart. Now you're forecasting the potential opportunity on the lower time frame. So you're going to look at this larger correction and tell yourself, well, anything happening here in between, it's not likely to be a higher probability setup. So, but if the price does push out of the higher time frame correction, and if it does form a lower time frame continuation price action, then this is generally a very good potential setup that we can take, and you can kind of forecast how you want to enter this, what's your stop loss, and what's your potential take profit, and then etc. And that way that you're prepared for the market condition when the market does develop into the right price action for you to execute. Okay, everyone. So I hope this video explains everything from analyzing the market from scratch and how I utilize price action, multi-time frame analysis, top-down approach, impulse and correction strategy to my advantage to be able to capture the impulsive phase. Again, you want to be in the impulsive phase of the market condition, and you don't want to get stuck in the consolidation phase where market is likely to not move too much and it's moving sideways a little bit, and you don't want to get trapped in the consolidation because sometimes the consolidation can go on forever and you don't generally want to be stuck in the consolidation. So any question, comment, feedback, welcome to let me know, guys. And again, I will put out many educational video below talking about price action, talking about impulse and correction phases, entry, forecast, backtesting, and more. And thank you very much, guys, and hope to see you guys soon.